Right, welcome everybody. My name is Mike Hamilton from Trade the Easy Way. I've been trading since about 1984, 85. So I've been around a long time in these markets. So I'm just going to share with you what I'm seeing. I'm going to keep it nice and short and snappy tonight, particularly as it's such a lovely evening. Don't want to spend too long in front of my screens. A lot to talk about. And this is the dollar. So we've got US retail sales tomorrow. For those of you not used to the format, by the way, by all means, punch in any questions in the chat room, chat box. If I don't answer them straight away, I'll come back to them. If for any reason you want to chat with me and ask a question, then drop a note in the chat box and we'll time that up. In the meantime, let's just get going. So dollar. Why have I put the dollar up? Because what the dollar does is really crucial here. One of the biggest problems the market has got, particularly obviously the US, is this just breakaway pattern in the dollar. At the moment, you can see we're just peeling back into this bar here. So if the dollar maintains its strength and picks up here again, then that spells more problems for particularly the US markets and globally. Although things are changing, the US dollar is still the world's reserve currency. We need a big shakeout in the cryptocurrencies before crypto can have any significant long-term impact on the markets, in my book. There's way too many cryptocurrencies for a start, so we need a big shakeout. And I talked about every autumn, or last two autumns, I talked about how the Bitcoin will drop, and we'll look at that in a second. Anyway, so this is strong, and if you look at the volatility index, this is still elevated. Anything over this area here, it's still a fear zone. So unless we significantly drop down here, then the markets are still going to be temperamental and stay bearish. Right, at the moment, they are trying to reverse. So let's have a look at the Dow. So we've got this pin bar reversal signal here, and I've been buying dips today in the futures market. I've not done a screenshot on my account, but I'll do that again some other time. So picked up the lows here and took them off at resistance, because this area here, this 32,300 or 280, is a major fire line. If we can't get over this fire line in the next couple of days, then expect this to go lower. However, ordinarily, when you get this kind of bar with the volume to confirm, you would normally expect to see at least a retracement into 33,000. Okay, so that's what I'm looking for to test that this week. No, it's options expiry week. So on an options expiry, you sometimes find that the markets hit the big numbers anyway. So it's about the reaction to retail sales tomorrow, I think, is the key to this week. US being a consumer economy, like the rest of the developed world. So if people are out there spending, then that bodes well for the economy. If they're not spending, then hold on to your hats. And of course, we have a consumer squeeze going on. Right, let's talk about, wow, oil is still going. It's one of the few days I've not traded oil today, and this thing has just flown. I was really hoping this will pull back into closer to the 100 mark, and it's just off again. So, well, the main resistance point now is 116. We're here at just 111. So if we close up here, I'll attempt to buy 875 again if I can, if I give them the opportunity. Because we look as if we are going to go back up to these highs at this rate. Gold is stirring itself. We came back into this February area. We'll obviously go through the miners very quickly and see what the miners are doing. But yeah, this obviously, if anybody is in and following and investing in miners, then this bodes well. It's been a tough old year for gold. Obviously, if you reflect back on what I started talking about on the dollar, the relationship of the gold and the indices is, of course, divergent with the dollar. So that run for the safe haven in the dollar has really given this gold a hard time. But if this is going to be a pin bar reversal and this 50% is going to hold, then that bodes well for gold for the foreseeable future. We, of course, to confirm, in my book, we need to close above 1825 tomorrow. By tomorrow, I think. Otherwise, we'll just end up trapped in this range again. We've got to come out of this range. Volume is picking up. The support appears to be there. I would, if you're looking to trade gold, I'd try and capture 1790 again, rather than, certainly wouldn't chase this market. And the silver is, surprise, surprise, trying to do the same, coming off again, hammered. Close underneath this 21.36. If we can get up here on volume, then I would have thought we could at least test 22 and possibly 25 if we can get going, if that dollar can stay nice and low. Right, let's have a look at, while we're on the subject of commodities, let's go and look at some others. Wheat has gapped up. India has, come on wheat, there. India has capped exports. Wheat was already under pressure and huge. You can see that I've drawn this some time ago, well, as this was forming back in April, hoping for another pullback. So we now have a gap situation. We've gapped up before and pulled right back. So after this initial shock, again, I wouldn't chase the markets, but if we see 11 or 12 bucks down there, I will be a buyer. This thing is on fire. I've been talking about commodities since March, April 2020, particularly gas. Let's have a look at gas. This is not settling back. Normally this time of year, you expect gas to be well and truly settling back. For obvious reasons, it's not. I still think there's time. Would I short it? No way. No way would I get in front of a train like natural gas. Way too volatile. If you want to short something, I'll show you what to short later on in the session here. But I would not short something that's steaming ahead and could potentially rip your head off like gas. Beans is the one I've been talking about for a long, long time. So beans is pulling back. So this is potentially better. Any pullback into $14.80, that will be a golden opportunity in my book. Will it do it at this rate? No. We've got a three touch. Oops, didn't mean to do that. 3 touches of that low has put a fire under the beans again. I think we'd be lucky to see 15 again. 15 is right underneath where we are. I rephrase that. I think we'd be lucky to see 15.5. I think beans are going to 18 plus. I wouldn't be at all surprised to see 20 by the time we hit midsummer. And corn, all these commodities are doing the same. Orange juice I talked about recently, that's taken off. So the pullback was 16, we're up to 17.5 nearly. Now metals, let's go back to metals. Here's high grade copper. This looks very interesting. Copper's got a big relationship with the housing market. which I believe to be way too hot. I think the big money is getting out of property. That looks as if that's a handsome pullback. So we were up here at 50, we're down here at 42. Now I would trade any of these commodities. I would trade in an ETF, something like Wisdom Tree, or iShares, the big players. Go for the physical commodity. Don't go for any of the leveraged products. But these look, cotton. That's off the subject of metals. That's going. Lumber. Now this is so. Yeah, like I said, I think the property market is a bubble that is potentially bursting with higher rates, etc., etc. That is, we've got a gap down here of 68. Anyway, I'm not going to be trading lumber, but I will be trading these grains and other soft commodities, as we call them, like orange juice and so on. Okay, let's move on. Let's go into stocks. Right, let's start with banks. Barclays, I'm still in. Bought a couple of positions down at these lows. Volumes picked up today, picked up the last couple of days. It's got to close above 155. So I've got one position, can't remember my entry points now. I think my last entry was about 42, 43. So it's got a small profit, but nothing to shout about here at the moment. We've got to break up through that this resistance. Otherwise, I will consider just getting out. Well, I won't consider getting out. I will get out, full stop. All right, so we've got to close above this resistance. Otherwise, I don't think Barclays will do anything. But I believe, well, I'm in it because I believe it's going to do it. Right, let's look at Lloyd's. Now that has had it's got a good little move off of this 42 area. Again, if we open and close above 44, 45, I think that can go on another little bit of a run. So volume is good, not brilliant. Actually, no, in Lloyd's Bank terms, that's not bad. In Lloyd's Bank terms, that volume is getting healthier. So I think that is viable. I would get out if we start breaking 41. Standard Chartered. Wow, yeah, that's doing well. Liking the strong dollar. Let's move across to different parts of the industry. Let's look at insurance, direct line. That looks good. If it has a bad day and hits 240, I think that get your stop underneath 230 and then see if we can creep back to 280 plus. If I pin back, I think that's back in play. Sabre. No, not for me. Legal and general, moving aside across, seeing significant volume coming in and picking up. So if you can pick up 245 with a stop under 234. Now, the sectors that do well in this environment is financial services and energy. The consumer staples, yeah, possibly, but the banks and energy and commodities, because of the inflation environment we're in at the moment, is the place to be. Stocks in other sectors will do well if you are very fussy about your stocks you want to trade. Then you can do well. Okay, so that's, I don't think there's anything else in the financial sector I want to look at, is there? Anything in the financial sector you want to look at? Ashmore. Ashmore is looking like it can pick up from here. Volume has been good. Anything you want to look at in the financial sector? AJ Bell. That has seen a lot of volume down there. Let's look at Hargreaves as well. Why not got Hargreaves in here? No. Okay, let's look at Hargreaves. AJ Bell is potentially looking better at this stage. I would stay away from Hargreaves unless that closes above the 875. Yeah, I would not engage in that market unless that closes above 875. I am interested in Hargreaves. I will keep a lookout for that. Let's look at retail. Boo. The last few days has seen increasing volume, so I would, if you're interested, I would try and buy 75, but I would get out if that breaks under 64. And let's look at Asos. Volume is picking up. It's really struggling stock, but it is beginning to pick up. Let's look at the supermarket. Sainsbury's, decent move, decent that on volume. 240. If you're able to bid on 240, that looks as if with the volume coming in, that looks as if that's capable of going back to at least 265, 270. Tesco. What have I done with Tesco? There you are. Yeah. And this earnings drop on the 13th down there at 250. That's got bought. Don't chase the market. Try. You may see 275 if you really want to get into that one. Ted Baker. No, it's gone in my book. Don't chase it. Royal Mail Group. Yeah, I think this is in play. I think the volume, the price, it's holding 340. I'm in it. I would. My stop is underneath 310. I'm not looking for a big move here. I'd be happy to see 390. I don't know if we're going to get it. WH Smiths, don't like the stock, but it is picking up next. Been on a little run. Next is leading the way in terms of those retailers. Chewy. So just looking at the consumer side, not for me, but it is looking better. IAG. So I'm classing the airline AIG in the sort of consumer sector rather than pinning it on a different level. If it can get above 125, that might do something. Volume's horrible, but at the moment I have to say that looks lower. So I wouldn't be getting into that. Right, let's look at, I said to you I was going to short something. These are the guys I'm looking to short. Card Factory. I think this is a terrible brand, and I would happily get short around this area here. The volume's already beginning to fall off. Already, we're coming up on low volume. So I am going to bid on 65. I'm sorry, I'm going to offer out at 65, and I'm going to have a stop above 70. So I'm going to short this at 65, and my stop is going to be up here. And I'm going to look for that to close underneath 64 and hopefully come down on volume. That's Card Factory. This is Shoe Zone. Obviously not going to short that, but that's coming into a sell zone. So I'm going to keep an eye on this, because if that pokes as a gap fill that, in fact, I'm going to take that off. I'm going to highlight the gap. I would love to short 155 with a stop above 165 on shoe zone. Why? Because I just think these are stocks that are very, very vulnerable, have already shown signs of selling, and I think the selling is only just beginning. Every time we hit here, we sell on shoe zone, we sell. So why wouldn't they sell it up here? And we keep getting, we've got lower lows up till here, got a higher low here. But if we start to sell up here and have a significant lower close, and the volume comes off, or the seller's volume increases, I'm going to get in and stay in. The safer way to do this is to stalk it and wait for a sell signal. Don't jump in, don't chase it, wait for a sell signal, and there is no sell signal on there whatsoever. The same goes for the other ones. Card Factory and well, just Card Factory, and this one shoe at the moment. Okay, so this is a very vulnerable sector and to the consumer squeeze, and I think this is worth going in. Right, let's go across to commodity related stocks. Gem diamonds, this looks good. I think this pullback is viable. Sorry, let me just clear that. Volumes picking up, we're closing higher. We've already seen about 78. So I think this gem diamonds is viable. This is a 1, 2, 3 wave up here, 1, 2, 3 wave pullback. So if this holds and we close higher and the volume creeps up, this might end up the year up here if we get a sustainable volume and a sustainable higher close. All right. Trade at your own risk, make your own decisions. These are just suggestions. This is just an observation. All right, this is not a recommendation. I'm giving you an observation. Right. TPI cap is definitely in play. And I would look to buy this tomorrow. Volumes are not great, but I'm happy with the way the price is moving. So I'm going to try and buy 120, and my stop's going to be under 109. And we've got Man Group. Where's Man Group here? Man Group, it's too high for me. Elementis. This is in play for me. I would love to buy Elementis if I can get 110 with a stop under 105. So I like TPI cap, I like Elementis, I like Gem Diamonds, Rio. Now this looks good. This is holding a key level here, 52. So I think Gem Diamonds is good. You're all very quiet tonight. Right, energy stocks. I'm out of PFC too early, but I don't care. I've got a profit. I bought in this at I think 104. I can't remember. Got out just around the 147 mark, and it's still pushing up. It could potentially keep going, but hey, I'm out. Tullow has pulled back and is holding. Tullow has got a real problem with this 60 level. Petrofac, yeah, okay. It's a potential head and shoulders failure here. If we can't, volume's getting lower here. This Tullow could be over and done with. Huge sell here. So if we can't get back above 55, Tullow's in trouble. At the moment, the volume suggests that that is a big issue for Tullow. So be careful. Golf, that's already gone. 88E, forget it. That's dust at the moment. Don't even think about going there. Right, any other energy stocks before I move on? Basic material. Let's look, miners. We haven't done miners. Let's do miners. This is a US copper miner, FCX. This is the copper play. We just talked about copper. One way to play it, particularly if you trade US stocks, is to get into FCX. If we can sustain that 35, sorry, didn't mean to do that. Volumes are picking up here, so I would try and bid on 34.50 if you're interested in that one. Poly metals, yuck, horrible. MGAM, that has, I haven't done enough research on this one, but this looks as if that is a goer to me. Bit concerned that we closed lower today, but hey, if we hold this area here, yeah, this was £4 not so long ago. I haven't done enough sufficient research on that to go and trade that myself. I need to go off and do a bit of background work, but that potentially looks very good. Right, I'm done. Unless you want me to look at anything else, I'm done. Okay, BT. Yeah, I haven't looked at BT for a while, have I? Rolls-Royce. I forgot to look at Rolls-Royce. Wow, really struggling. Really, really struggling. Vodafone. Decent volume off this 118. In fact, so much so, I need to get back in this Vodafone. BT at the moment is going nowhere. I much prefer Vodafone. I think BT is perking up. Let's look at the volume of Vodafone. Yeah, Vodafone's a big yes for me. Oh, is that Airtel you're pointing me towards? Keep seeing, yeah. It's reporting tomorrow. Thanks. Right. Okay. Thanks for that warning. I would have checked that. No, actually, would I have checked it? I think, yeah. Thanks. I think they're struggling here. This is aircraft leasing, isn't it? I think. I think that could come lower. Very unconvincing volume. Telecoms. Is it telecoms, right? Okay, I thought Airtel was. You get destroyed with fake breakouts. Can you give me an example, Adele? Yeah, it's had a lot of sell off this 150 down to 128. Not for me. If that came down to 125 and had volume, I will get interested. Right, a few people have drifted off. Any questions? Anybody got any questions? Anybody got a stock they're looking at, wants me to go over? Anybody wants to ask me anything, come on stream and ask. What do I think about the SPY now? Good question. Because obviously it's in play as we talk. Wow. Significant. Wow. Let's look at a 10-minute chart. I've missed this. Suddenly, okay. I think this is, if we can hold these levels, then that's a significant close today and bodes well for potentially the rest of the week. Gold, oil is still marching up. Let's look at the, so that's the Dow. So you asked me about the SPYs, didn't you? Yeah, well, same thing. If we hold these levels into tomorrow, and we look as if we can go and find 4100 and potentially make our way back to 4500 if we can keep sustaining this. So if we can, so we've got this big huge trend line up here, the touch of which will be 4500. It's beaten up. Royal Mails this week as well. Thank you very much for highlighting that. I haven't done BP and Shell. I'll do that. Go and do that in a minute. We do look as if we are in for, you know, a long overdue pullback. So if we stay above this trend line on the SPYs, S&P 500, we could potentially go all the way back to 4,500. There's a lot of resistance. There's a couple of resistance points up here. If we slam into this kind of area and fail, just around the 43, 4,400 mark, then that could leg us down to the 2021 lows. But there has been significant volume coming in off of this now. Right. Ooh, yeah, thanks again, Yonja. It's not Yonja, is it? Anyway. I know, but yeah, thanks for that. It's been a lot of interest. Also, there is a big, I heard, I've not found a story on this, but I heard there's a big US hedge fund that's banging on the boardroom table of Vodafone as well. They take a 9.8% stake. Wow. Yeah, it looks as if the shorts are getting, or whether the squeeze are already underway. You can see the buyers are stepping in. The shorts are covering, so we are getting a squeeze. We are definitely getting a squeeze. So it's a question of how far this can take us. I'll take you back to the dollar all the time. If this dollar can come off and close, and the euro and the pound can pick up, the euro pound of course has been well and truly beaten up till now. Here's the pound. In fact, that was a buy signal on Friday. So yeah, at the moment it looks as if we are on track for some higher numbers in these indices, and I'd be very happy for those retailers to pick up. The ones I mentioned, Shoe Zone and Card Factory. I'll do some more scanning for others. Right, they're okay. So Citigroup, etc. I think parties can do 260, 316. I noticed there's been a flurry of upgrades this last couple of days. I mean, cyclically, this is a time when we should be higher anyway. Cyclic, you know, you look at 20-year averages, we should be, you know, April, May, March, April, May is normally one of the best periods in a cyclical year. So technically we should be getting a lift in this period anyway, but obviously geopolitics have changed all that. Right, I'm off. Thank you very much for your company. I will be doing a video update on Wednesday, and if anybody not in the Telegram room, I'll give you a link from my Telegram room now for you to join that. Let's have a look, where are we? Right, if you're not in my Telegram room, then please join us. Thanks very much, guys. Thanks for your company. And yeah, I'll be updating the Telegram room, and I'll send out a video on Wednesday. Thanks very much, Yunka and everybody, Andy and everybody, Lawrence. Thanks for coming, Lawrence. Right, brilliant. Thanks very much. See you soon.